So far we've been recording all our transactions to a GST account called GST Clearing, and I guess we haven't really explained why it's called GST Clearing. So let's start from the beginning and say GST Clearing is assumed to be a liability, and we use an analogy of it being a big tub or a big tank of liabilities that we have to give to the government. And so therefore it has the rules of debits and credits of a liability, just like accounts payable or a loan and so on. As a business, when we receive GST from our customers or we charge it to them, that goes into the tub. So in this case, that would be $10,000 of GST on our cash sales and credit sales, and the water level goes up. In other words, the liability increases. So we would say that would be a credit into the GST clearing ledger. However, the government says we get to offset what we owe by taking out the GST that we've already paid or been charged by our supplier, which in this case would be the rent, insurance, and inventory purchased all had GST of these amounts, and that came to $8,000. And what we get to do is we get to reduce our liability to the government. The government's not going to come to us and say, give us $10,000 of GST. They're going to say, take out what you've paid, which is $8,000, and just give us $2,000. So when a GST clearing liability goes down, that would be a debit. What else do we know? So the GST clearing account follows the rules of debits and credits of a liability, but depending on the transactions for the period, it can actually end up being an asset or a liability. So let's just have a look. Let's take an example. This is a GST clearing ledger, which we assume is a liability. And when we receive or charge GST from customers like we did, it goes up. So that would be a credit. And then when we pay GST or get charged GST by suppliers, it would go down. So in this case by that. And if we were to balance this ledger out, we'd say the bigger side is the credit side. So to figure out the balance, we'd have to put 2,000 there, because 900 plus 100 plus 7,000 plus 2,000 equals 10,000. And that's what the credit side here equals. We carry that down to the credit side here on the 1st of February. And because it's got a credit balance, we would say that's a liability. So when the GST received or charged by the business is more than the GST paid or charged by suppliers, we say the GST clearing account will be a current liability. Now that will be the case in the majority of situations, but sometimes the GST clearing account might actually become an asset. So let's take an example. So in this case, we received and charged GST of customers of only 7,000. Say up here it was 10, down here it's 7,000. So that went up there. However, we've paid and been charged more than that. We've paid and been charged 8,000 in this instance. So what happens there is our liability goes down, and it actually goes down more than it went up. And what that means is if we were to balance this ledger out, this side here now, 900 plus 100 plus 7,000 is 8,000. That's the bigger side. So what we'd have to do is we'd have to put the balance there of 1,000 and carry that down to the debit side. And what that means is this GST clearing account is now a GST asset. So we could summarize that and say, well, when the GST paid or charged by suppliers is more than the GST received or charged by the business, the GST clearing account will actually become a current asset. So it could be either. And I guess just to explain why it's called a clearing account, well, we could say, well, the business is either going to have one of two situations. It was either going to be a current liability, so it was carried down to the credit side here, see the balance? So when it's a credit balance, that means the GST clearing is a liability. And what that means essentially is here's our business, and here's the government, or the Australian Tax Office, the ATO. We're going to have to give the government $2,000. So that makes it a liability. So we're going to have to give money to the ATO, and that is called a GST settlement payment. So we're going to have to pay the government to settle our GST clearing account. Now the opposite was when the GST clearing account was a current asset. So here we changed the name of it. We kept the name the same. It's still called GST clearing. We're just going to call it an asset. And that's because when we had all the transactions for this month, it ended up being a debit balance. And when it's a debit balance, that means it's an asset. So what's going to happen here is the opposite. This time the government is going to refund to the business $1,000. So what we say is the business will receive money from the ATO. And what we say, this is still called a GST settlement, but we say it's a refund and not a payment. So we're actually going to get money. And then what happens is, so in this case, let's take the liability. We're going to have to give the government money. So when we give the government money, the bank asset would go down. See here, it would go down. That would decrease bank, let's say on the 9th of February. And that must mean the debit goes here. And then we just reference those, they match up. So we would say GST clearing, there's the debit. Where will I find the credit? I'll find it in a ledger called bank. And in bank, I'll find here's a credit. Where will I find the matching debit to it? I'll find it in an account called GST clearing. And what's happened here now is that this GST clearing account has now balanced to zero. So we owed 2,000 and we paid 2,000. So what we say is that goes blank. And that is why we say the GST account has now been cleared out. So that is why it's called GST clearing, because it will be settled at some point. Let's take this one when it was an asset. So in this case, we're going to get money from the government. So when we get money, that would increase bank, and that would be a debit. So we'd put that there. Let's say it's on the 9th of February. We've got a debit of 1,000. That must mean it's a credit here in the GST clearing account. Let's get our referencing right. So in bank, we put a reference of GST clearing. And in GST clearing, we put a reference of bank. And what's happened here is this now balances to zero. It had a debit balance of 1,000. Now a credit of 1,000 has gone in. That's been cleared out too. So we say the GST account has been cleared out. And that is the point of these GST settlements, which is what we're going to cover in the next 2 videos. And that is because it clears out this GST ledger. And that is why we call it a GST clearing account.